Hello, my name is Lachlan Wallace. I'm the CEO and Managing Director of Hillgrove Resources. Today I'll be providing an update on the development of the Kanmantoo Underground copper gold project. For those unaware of the project, Kanmantoo is located around 55 kilometres from Adelaide between the townships of Mount Barker and Murray Bridge. Hillgrove mined a series of open pits at Kanmantoo from 2011 to 2020, producing 137,000 tonnes of copper and 55,000 ounces of gold during this period. All of the mineralised lodes are very steeply dipping and continue below the base of the open pits. So over the past few years, we've been exploring the potential to develop an underground operation to chase these lodes to depth. Drilling to date has been really encouraging and confirms mineralisation with grades, width and continuity to support underground operations. So much so in fact that we've recently commenced an underground decline at Kanmantoo using transformational continuous mining technology, which promises to change the way in which the industry approaches underground development, making it safer, faster, more efficient and greener. Shown here is this technology in action, cutting the Kanmantoo portal in November, which I'll discuss as we start to work through this slide deck. So let's take a look. First, a very brief corporate snapshot. We have a market cap of around $63 million with about $14 million in the tin following a recent heavily oversubscribed capital raise that gives the company an EV of only $49 million. We're fully funded to complete the drilling and technical studies to reach a final investment decision by mid next year, after which we expect to be mining and generating first copper sales by the end of 2022. The only other thing I want to point out on this slide is the carried forward tax losses of over $190 million, which become very valuable as we commence free cash flow from copper sales from next year, as well as $17 million in franking credits, which would enable the company to push out around $50 million in fully franked dividends. The Kanmantoo Underground is a very unique value proposition. It is a very low risk project with low capital intensity, quick speed to market and plenty of resource upside. The operation is fully permitted and enjoys strong support from the local Kanmantoo and Callington communities. All the infrastructure we need is in place, including a 3.6 million tonne per annum processing plant that's being maintained ready for a fast restart, and a permitted and operating tail storage facility with ample storage capacity. And it's this infrastructure, coupled with the close proximity of the underground lodes, which intersect the decline only 40 metres from the portal that you saw in the initial slide, that equate to a very low cost and short time period to first copper production. In addition to this, the technical risk is very low. The mineral lodes are the same ones that have been mined and processed for the past decade in the open pit. It's the same geology, the same geotech, the same metallurgy. It's essentially just a restart with a different mining methodology. And over 17,000 metres of drilling this year alone has demonstrated that the mineral lodes extend up to 500 metres below the base of the pit and remain open at depth. In addition, in November we launched a further 16,000 metre drill program to expand the resource ahead of the planned restart next year. I've mentioned the existing infrastructure already and the benefit this provides in reducing timeframes and the capital cost of first copper production. But in addition, at 3.6 million tonnes per annum, the processing capacity was scaled to match the open pit production profile and is far greater than the expected annual production from the underground, at least initially. And this puts Hillgrove in a very unique position to be able to quickly respond to changing copper price environments and scale up productivity by optimising the head grade to maximise the value of the mineralised resource. And we can do this without incurring any additional permitting or capital expenditure. As this zero cost optionality to respond to changing commodity prices to get the most out of the ore body that's unique to Kanmantoo and very valuable. Drilling is predominantly focused on the Kavanagh lode system below the main open pit. As you can see, we've had some exceptional drill results, including over 170 metres at 1% copper, which was followed up shortly thereafter with another 166 metres at 0.9% copper, 70 metres to the south. These are aggregated intersections which are made up of multiple higher grade lodes in the order of 10 to 30 metres in width at 1 to 3% copper. And these higher grade zones are interspersed with lower grade mineralisation halos, which really then demonstrates the potential to materially increase the mining inventory through a lower grade bulk mining approach, which, as I talked about in the previous slide, the mill has plenty of capacity to process without any additional capital expenditure. Also importantly, the image on the right illustrates that many of the drill hole intersections are outside of the previous mineral resource estimate, which is shown in the red and blue blocks. And as such, I expect that these drill results will translate into a material increase in the resource base when the model is released to the public in the next couple of weeks. The drilling results also highlight the potential to grow the resource even further as we target the down dip and strike extensions, both of which remain open. This image is a long section of the known resources at Kanmantoo. As before, most of the 17,000 metre drill program that we've undertaken this year alone has been to infill and expand the Kavanagh resource, which is shown here in a green zone below the main pit, with limited strike and depth extension drilling, really just to demonstrate that the ore zones continued, and we have now demonstrated that these extend at least 500 metres below the base of the open pit and still remain open at depth. This is some 800 to 900 metres now below surface. But this is only a fraction of the underground potential. There is plenty of opportunities to bring these other known lodes into the mine schedule over time with additional drilling. The current 16,000 metre drill program that we've just commenced will focus on firming up some of these work areas with a view to increase the annual throughput productivity such that we can better utilise the existing mill capacity. The targeted drill areas in the 16,000 metre program are Southwest Kavanagh and Spitfire, which sit immediately south of the main Kavanagh zones. Drilling this year demonstrated that these zones both extend at least 130 metres below the base of the pit at mineable grades and widths, and they remain open at depth. And given their close proximity to the Kavanagh lodes, these lodes would be mined from the same decline infrastructure as Kavanagh, and as such they represent an opportunity to add mining inventory into the plan for very low incremental cost. Further to the south we have Nugent, which is a satellite pit that was mined in 2015 to a depth of approximately 100 metres. The Nugent zone has always been characterised by a higher grade gold tenor, including 12 metres at 2.2% copper and almost 8 grams per tonne gold. But it's typically 8 to 15 metres wide, with copper grades ranging from 1 to 2% and gold 1 to 2 grams per tonne. Drilling below the pit demonstrates these lodes continue at least 200 metres below the base of the pit and again are open at depth and along strike. Newton's about 150 metres of development from the main pit, so again, relatively low capital to get established. And as a separate work area, it represents an opportunity to increase the annual production by establishing a second mining area that can run in parallel with the main Kavanagh lodes. And finally, North Kavanagh is an area that was mined as part of the upper levels of the open pit. It was not the primary focus and the open pit due to its steep dipping nature and relatively narrow intersections, which made the strip ratios really too high for open pit mining, but they're perfect for underground, and the very short development distances enable fast, low-cost development. Again, some very nice early intersections ranging from 7 to 9 metres in width at 1.8 to 2.1% copper with around a half gram per tonne gold credit. As a separate decline initially, North Kavanagh provides opportunities to increase annual productivity and operational flexibility. So as you can see, the theme of this new 16,000 metre drilling program is to establish additional mining inventory to increase the annual throughput such that we can more effectively use the mill capacity as we commence the underground from next year. As I highlighted at the top of the presentation, the decline of the Kavanagh ore load system is already underway. The decline enables us to establish multiple underground drilling platforms to further the underground drilling program, including stope definition drilling, which is on the critical path to first ore production. Stope definition drilling, illustrated here in red, increases drill density, which increases the geological confidence and thereby reduces the project risk, which increases then our ability to debt finance the capital development stage. In addition, the decline doubles as future mine access, which reduces time, cost and risk associated with the underground startup. The decline is a very exciting milestone for the Kanmantoo Underground, which ultimately brings forward the potential restart of copper production and further reduces what was already a very low-cost mine development. The portal in the initial 500 metres of decline is being cut with the Kanmantoo MC51 continuous mining machine, which utilises Kanmantoo's Dynacut technology. The decline will be developed under trial conditions with a view to demonstrate the commercial viability of hard rock mechanical cutting machines. Mechanical cutting has the potential to revolutionise the underground mine development process by making underground operations safer, faster, more cost effective and greener. And all this is being done with minimal cash outflow to Hillgrove through the combination of a $2 million grant from the South Australian Government and deferred and contingent payment terms from Kanmantoo, which sees no payments until the underground is funded, and thereby Hillgrove are able to put this decline in place with minimal cash outflow. So looking at the timeline, the grey bars are complete, orange remains to first copper production. We're currently underway with the underground decline as well as the 16,000 metre drill program and expect to be in a position to make a decision on the underground by mid-2022 and all going well, start the capital development, which will be a very short period before commencing ore production shortly thereafter. In terms of immediate news flow, the mineral resource estimate is currently being updated to include the 17,000 metre drill program that was recently completed and will be released in the next couple of weeks, along with a study which highlights the excellent project economics. In summary, the Kanmantoo Underground presents a low risk, low cost, near term production opportunity, plenty of upside with copper prices expected to remain high as the world continues to decarbonise, and plenty of exploration upside to increase both mine life and annual production potential. With all the capital infrastructure and permitting already in place and bullish outlook for copper, Hillgrove is well positioned to establish Australia's next copper mine, and with an EV of less than $50 million, Hillgrove represents exceptional value. Thank you. Some disclaimers.